Fed chairmen are famously careful with what they say in public. Any utterance could send markets reeling if they're misinterpreted by investors. But now, for the first time, Bernanke says he will do regular press briefings with reporters, 4 of them a year. Now, the world's other central bankers already do this, but for the Fed, it's a radical change in how it communicates with the markets and the public. So what's behind the decision? And will we see more market volatility as a result? Tony Crescenzi joins us now. He's a market strategist and portfolio manager for PIMCO. He's with us this morning from Newport Beach, California. Tony, so you say this should be the
Hey, Margaret.
Open mouth instead of the open market committee now.
Right, so there's something called open market operations. These are the daily activities of the Federal Reserve to adjust monetary policy. So you can call it open mouth operations. So the Fed can adjust, you could say, financial conditions by using its words. There's only so much that words can do. Ultimately, actions of what will be necessary, but this is all along the lines of battle readiness. You could say the Fed needs to manage inflation expectations because, as you know, the Fed has put a lot of money into the financial system, over $1 trillion. It's continuing to put money into the financial system. There's a misunderstanding about what that money is doing, the so-called reserves, and what it could cause in terms of inflation. And so inflation expectations have been rising. And so today in the University of Michigan Consumer Sentiment Survey, you saw inflation expectations by the general public at a 3-year high, mostly probably because of the gasoline prices and food prices rising. But there is a feeling that the Fed is causing this. And so the Fed, in using its communications, can help guide inflation expectations lower by assuring the public of its commitment to price stability. So it's a very important aspect here. And quickly last, in terms of battle readiness, the Fed, of course, wants to reduce collateral damage that might be associated with any rate changes or rate reversals, when the Fed begins to raise rates sometime in the future.
Do you think Bernanke is an effective communicator?
I think he is, and I think he has great intentions toward the economy, and he's not aligned to any political party in any meaningful way that we can tell, and so he seems to want to do the right thing, not only in terms of the Fed's dual mandate, but in terms of the nation. And
but ironically, you were also just talking about this politicized environment in which, in many ways he's being criticized by political parties. QE2 famously became, football in the political arena.
This is part of the communication strategy to make clearer what the Fed is doing. So, for example, there's this feeling that those $1 trillion are causing the movements upward in prices, but the money itself, the reserves, have not actually found their way into the financial system in any meaningful way. For example, when the Fed purchases Treasury securities, and it could purchase $20 billion worth in a week, let's say, when the Fed transfers the money into the banking system for the banks that sell the Treasuries to the Fed, that money is returned to the Fed, has been returned to the Fed as a so-called excess reserve. The money's not stayed in the system. It's not been lent out. Lending figures show continuous decline. So the money's not actually in the financial system. It's withdrawn on a daily basis. And so the Fed wants to communicate it's these types of things to show that it is very cognizant of what reserves could do, or that money could do toward inflation, that it is very intent and it has an unwavering commitment to price stability.
But why has it taken so long? I mean, Alan Greenspan, once he left the role as Federal Reserve Chairman, talked about what he called a purposeful obfuscation. He did not want people to truly understand what it was that he was saying when he was before Congress. This seems a complete reversal if we're now about clarity.
Well, there are more extraordinary conditions now with respect to monetary policy. The Fed has become a player. It's not just a referee in the game. And I'm reminded...
You think Greenspan was more of a referee?
He was, well, some could argue that the Fed during his time and before could have been a better referee as a regulator in terms of what happened in the financial system during those times. But the financial innovation seemed to go faster than regulation. So and many regulators had some responsibility for that. But in terms of why the Fed need do this in part, and think of the decoding aspect of the policy statements. After a policy statement is released, there are many, many analysts trying to describe what they think the Fed said. I'm thinking of a commercial back in the 1970s. I'm old enough to remember these. A Fabergé commercial for shampoo. who, where you tell two friends and they tell two friends and so on and so forth. And somewhere along the line, the message gets lost. And so perhaps it's better to get it from the source. And I think we'll have greater clarity. And when the Fed changes its policy, when it pushes rates up, it'll want this clarity to perhaps say, because this may be the case, that, hey, yes, we are reversing our interest rate policy, but don't expect significant interest rate increases. And we at PIMCO wouldn't expect significant rate increases when they happen, because there are still very big overriding secular issues. For example, big unemployment levels in the construction trade and other areas that are structurally impaired now, will be for years. And so the amount of rate hikes needed going forward probably won't be substantial. And the Fed will want to communicate that when they start to raise rates.
Yeah, some people would say monetary policy is more effective if there is sort of room for speculation, right? If you don't know exactly their intent. I mean, look at the latest Fed statement from Bernanke's Fed. They did not address what had just happened in Japan in that. They completely ignored what had changed in the global sphere. So there still seems to be the choice to not directly answer the kind of questions he's going to get from reporters when he stands up there.
Well, the Fed itself, and Bernanke knows that the power of surprise is important. In fact, he's written papers to show that when there is a surprise, a positive surprise, tends to help the equity market, and they want to have the element of surprise where possible. But they also want to leave some space in between, at times, of course, between new data that are released, or headlines, and decision-making, because, of course, its policy-making must evolve with data, and not just a bit of data, but a cumulative amount of it. And of course, therefore, yes. And so when the Fed is forced to speak more frequently about these things, it could potentially cause more volatility. But I think what Bernanke will do and what his job will be is to say, look, we're going to wait on more information before we decide.
It's going to be fascinating to watch, Tony. I know you'll be watching it closely.
We'll enjoy it.
Take care. Have a great weekend.